Now, Tech Mahindra is on our radar after the company has made acquisitions worth 330 million euros. They've acquired Com Tec Co or CTC, a European IT services company, for 310 million euros and have also picked up a minority stake in two insurtech SaaS companies for 20 million euros. Vivek Agarwal is President BFSI, HLS and Corporate Development at Tech Mahindra, and he's joining us right now to answer some questions. Vivek, great to have you with us here. Thanks very much. Prashant this side. You know, you've said that this acquisition of CTC essentially is going to be margin and EPS accretive right away. Could you tell us what operating profit margins does CTC make?
Hey, Prashant, good morning, and thank you for having me here. I think just from a financial metrics perspective, what we've said is that the business does deliver industry-leading EBIT margins, and that's what drives the accretive nature of the transaction from an EPS perspective, as well as from a free cash flow conversion perspective on this transaction. Okay. And just from a valuation multiples, it's pretty much in line with where the industry is for these kind of capabilities and the metrics around revenue and EBITDA performance.
Vivek, could you give us a number? I mean, historic number, not future. What are margins for CTC?
Prashant, unfortunately, you know, we are in a silent period with our quarterly results around the corner. So I'm unable to give you an exact number on the margins. But as I said, it is the company does deliver industry-leading EBIT margins.
Okay, Vivek, good morning. It's one of your most expensive valuations, clearly, both in terms of the amount you're paying and even in terms of the valuation. What's the rationale? Is it to boost up your BFSI presence? I mean, your competitors like TCS and Infosys have 30% plus from BFSI. I think you are at 16%. Do you want to get there in that kind of ballpark zone?
So clearly, when we look at financial services, it is one of the largest spenders on technology. It does represent between 30 and 40% of the industry overall. And we've always stated as a strategy that we do want to grow our financial services presence across the industry segments. It's been one of our best performing verticals over the last few years, and we do intend keeping up that same pace. This obviously is very focused on the insurance sector. So you're absolutely right. This is our attempt to be differentiated and creating a right to win in the insurance sector. And as we look at the industry, the insurance industry in particular, we do expect significant digital transformation being undertaken in the industry, and the industry spend rates will grow at least 2 to 3% higher than the average industry growth rates. And so this is all towards finding higher growth and transformation opportunities for the company. And I think you had another question around valuation.
Significant, sure.
I think just
please go ahead.
On the question around valuation, just from a capital commitment perspective, this is one of our larger acquisitions. It's probably our second largest capital commitment after the Satyam acquisition, which was 12 years back. But from a valuation metrics perspective, we've always stated we will stay disciplined on what valuations we pay and what returns we can generate for the shareholders. So I think we just followed the same metrics and measurement criteria here too.
Okay, you got that. Vivek, hi, good morning. But it's been a shopping spree, hasn't it? I mean, 9 acquisitions in FY22 itself. Do you think this pace is something that will continue? And you spoke about how you want to be a part of this whole digital transformation ecosystem. Any more potential acquisition candidates that will help you reach this goal?
So I think when we look at the acquisitions and the opportunities, they're obviously evaluated on an individual case-to-case basis. Yes, we've been fairly active in the last year, which I think is also a reflection of the opportunity in the market. And when we start looking at opportunities and look at growth, look at synergy, a lot of them seem to make significant sense in high growth scenarios, and that's why we've been active. And as far as forward looking is concerned, we will continue to look for opportunities. We've always stated that M&A will be an integral part of our growth strategy. But we've also committed to our investors that we will stay disciplined on the valuations, what we buy, and look at integration and synergies very closely as we embark on these transactions.
So Vivek, your peers are returning cash to shareholders. I mean, obviously TCS has launched a big buyback, but you will be using the capital mostly for more acquisitions going forward. What can shareholders expect?
I think the right time to address that question will be our quarterly results, which is a couple of weeks away. But clearly, when we make investments into growth, we look to generate higher returns for the shareholders. And this is about total shareholders' returns ultimately, and not necessarily only about cash returns.
Vivek, without going into specifics, what can you tell us about client budgets? Are they going up? By how much? The CEO at Wipro said that they could be up by between 5 and 7%. And second, on a general level, on a top-down level, are clients agreeing to higher pricing? Are you asking for higher pricing? What's happening there?
So I think just generally from a customer spend perspectives, clearly the demand scenario continues to be strong across industries, across verticals. And we are obviously in a multi-year cycle around enterprises going through largely technology-driven transformation, which obviously is positive for the industry. On your question around rates, unfortunately, given that we are in a silent period, I will not comment specifically on Tech Mahindra. But the industry trend is clients are willing to consider higher rates because there is just so much of shortage of technology and talent. That if you are able to get the right skills and the right capability for the clients, they're willing to pay a premium for it in this market.
Okay, that's always the best place to be in, right? When clients are willing to pay a premium. Just one final question then, Vivek, on, you were talking about BFSI and the potential there. Of course, you're making these acquisitions so that you can increase your reach there. It currently contributes less than 20% to your overall business, while your larger peers have a bigger share. Over the next 2 to 3 years, how much do you think BFSI could contribute, and what could be the growth triggers, particularly for that space?
So it's a fact that we are under-indexed on BFSI, where we are 16-17% of our revenues come from BFSI. Instead of giving a forward-looking statement, I can only point out to the historical performance. The share of BFSI as part of Tech Mahindra's overall revenues has grown from about 9% to 17% over the last 5 years. And it has been one of our fastest growing industry verticals along with high tech in the last few years. Want to continue maintaining that delivery and performance for the business. We've clearly stated it as one of the 3 high growth verticals along with the healthcare and high tech going forward. So we're all focused on delivering a stellar performance there.
All right, all the best for that. And you have created a lot of wealth for shareholders in the past. Hope you continue to do that. Thanks a lot, Vivek, for joining us. That's the word.